Good day, traders. This is the Wave Rider. I had some questions regarding a successful trading system. And one of the things we were talking about is that analysis is not the final step. You have to be able to analyze for sure. It is the most important thing you can do when trading is having a successful and complete analysis so that you know where price is going, where price has been, and when you should expect to enter a position. But that is not the only thing. A successful system should have analysis, trade entries or trade triggers, money management, and also help you with trader psychology. So in this example, let's just use this. NZD/USD. Let's say we had did our analysis and price was now bouncing bullish. Okay, let's say this whole area here was not here. We did not see this. So price, doing an analysis myself, price would have bounced on the bottom, gave us a new top here. Okay, it pulled back, and gave you another top. At this point, we have two tops. In our analysis, we start connecting tops and hypothetically make a bottom. So I would clone this line, put it on the current bottom we had. And now when price came to this bottom again, knowing that in our analysis system, we will be looking for anything from 3 to 5 waves, we would have, oh, messed that up. Have one wave, two wave, and this would be, we'll be looking for a third wave. So if price was up here, just gave us a top, we would be looking for a reversal in this area. So now this is a daily chart. Your trigger can be on a monthly, weekly, daily, 4-hour, all the way down to a tick chart, whatever your system details. But that trigger is what you are looking for to signal a reversal. I call it a bounce or a break. Same thing here. If price breaks my upper trend line, you have to have a trigger that says that price is broken. Also, you have to have a trigger that price is bouncing. So let's just say here we're going to use the daily for our entry time frame. Normally I don't, but you can. These would be big swing trades. As you can see, it's about, how many pips? That's about almost 500 pips in each one of these swings. So let's just say a daily, a swing trader is looking at this, and let's say we're looking for an entry trigger. I'll give you one that I see right here. This is our first entry trigger that we teach all of our students, is the pin bar entry. What a pin bar is a price rejection. They call it a price rejection, but what it is really a hunt for stops. So people who have gone long, after they see this bottom, they will put their stop loss somewhere around under here. So when price reaches down, it's reaching down to hit those stops to continue a bullish move. So on our pin bar entry, let's just say price was coming down and it's coming into our hit zone area. One way we determine our hit zone is using Fibonacci's, trend lines, different methods. But I'll just show you right now Fibonacci really quick. So prices, here's our top. Okay, so right here, price is coming into the 786, which is one of our high probability reversal areas. So this would establish a hit zone for right this area, this trend line, and this Fibonacci retracement area. So with that, it confirms that this is a high probability trading area. So now our trigger that we see, once we got the pin bar, our system gives a certain number of pips depending on the time frame that you place a trade above or below the pin bar to confirm that the price is going up. I'll just give you let's just give you a hypothetical of this pin bar entry. So on our pin bar entry, let's just say it's a long position. Let's say we take our pin bar, set our price here, our entry here. Our target would also be based off of this pin bar, the tail. It's so many pips below the tail, which is what we use in our system. And on a pin bar, we usually look for 1-to-1 as the first target. And that brings us to our second thing. First off, you have to do the analysis. Secondly, you have the trigger. Third, you have to have the money management, which breaks into two parts. The first part is your establishing your entry, stop, and your targets. But the second part of that money management is establishing the probability of this trade. We categorize trades by P1 through P5. So the highest probability trade we have is a P1. This trade will be considered a P3. Yep, a P3 trade. And so based off the probability, it tells you how much of your account you should risk based off of the probability of the trade. So that determines how many dollars you're risking based off of these 154 pips. So that's the stop loss right here. So whatever the percentage of your account that you're risking in dollars, you divide that by the number of pips that you're risking. Okay, so that's the second portion of money management. There's a next point of the money management. You can choose to put your trade entry as one solid entry, which means you would enter one position here and you would take your profit here on the 1-to-1. Or if you wanted to do a 1-to-2, but our regular take profit on a pin bar entry is 1-to-1. Or you can split it into two positions. So you would take whatever, let's say you're doing a 2% entry, you would take two 1% entries at the same area. They would have the same stop loss, but one would be a 1-to-1, and the second one could be either a 2-to-1 or it could be a rider. So basically you would just follow your stop loss with the price as it moves up. This allows you to maximize the profit from the move. If you've taken a correct entry, the price can move, and if you're expecting it to break out of this pattern, then you would continue to ride that price all the way as it continues up. As you can see, it still kept going up. A third way that we manage our money, is the way that I prefer, is that you actually take your 2% position and you break it into three separate positions. Each has the same stop loss. The first one is 1-to-1, second one is 1-to-2, and the third one is the rider. That's why I call myself wave rider, because I try to ride the waves as long as possible. So that position would continue as long as price moved up, and you could trail your stop based off of whatever you choose. You can base it based off of pullbacks. You can put your stop at break even and just let it ride, or for every major pullback you can move the stop loss under there. So you'd ride it up here, pull back, starts to go again, you could put your stop here. Pushes up, pulls back, put your stop somewhere under here, and you continue doing that until price reverses. You find another reverse or price reversal where it's hitting another trend line. And how we know price is bouncing is that you get an entry trigger. That is the confirmation that price is reversing. If we do not get an entry trigger, price is not reversing. That is your signal. Entry trigger at a reversal area or hit zone is your trigger, is your confirmation that price is reversing. All this, the analysis using all the different tools we use, The entry triggers, which we have 8 of them, each of them have their own stop loss and target and entry settings. And our money management was divided into the probability of the trade, the actual risk management, and the position sizing and the position management. All that's woven together with the trading psychology of why we do what we do and what is happening in the market. We teach you what is happening in the market. We teach you about the candles, we teach you about the reversals, we teach you about the market makers, we teach you about how the news is used to manipulate the market, how there's a daily pattern and daily sessions patterns. All these are all woven together with this trading psychology, which makes our system complete. Some systems are great at analysis. Some have 1,000 different entry triggers. Some have some good money management. Some have good psychology, but we have all of it. We have all of it, and that's what makes our traders successful. Once they are confident in one or multiple of the triggers, once again, you can't do anything until you learn how to analyze. That's the first 5 weeks of the course is analysis. There's a 6 week, not 6 weeks, it's a 6 module course. The first 5 modules is all analysis. Then you learn the entry triggers, money management, and the trade psychology. That all comes in the last because the most important is learning how to do the analysis. So I hope this answers some of the questions that I've been receiving about how I enter trades and how I pick the areas I pick. Because sometimes I'll put an analysis on TradingView, but there never was a trigger. So if there never was a trigger, we don't enter the trade. Even if I put an analysis and say go long here, if there was never a trade trigger, I would not have entered the trade and our traders would not have entered the trade. So you also have to have it, like I said, your trading time frames. So you can use the daily on down to the 1 minute. We usually stick in between 15 minutes, a 4 hour, and daily if it depends on your time schedule. And if you have different work schedules, we can also help you to see what's best for you to trade and which sessions are better for you to trade. But that's all I have right now. I just wanted to make sure and clear that up. And I thought the TradingView post that I made wasn't clear enough. I wanted to make sure and speak to you and let you know exactly what I wanted to get across. So that's it. Good trading. Catch the wave and ride it.